Welcome and get ready to dive into the thrilling world of investments, where numbers dance, money talks, and the unexpected always keeps us on our toes. Are you looking for a reliable and steady source of income that can help you achieve financial freedom? Well, in this video, we're going to unveil a safe and reliable way to generate passive income that anyone can do. We are going to introduce the top 7 dividend growth stocks for 2023, your key to a steady and dependable income stream. These dividend growth stocks offer an opportunity to build wealth over time, allowing you to break free from the 9-to-5 grind and live life on your own terms. If you're new to the world of investing, you might be wondering, what's the deal with dividend growth stocks? Well, let me break it down for you in simple terms. Dividend growth stocks are like those rare treasures that not only increase in value over time, but they also give you a generous dividend regularly as a shareholder. It's pretty much like getting a regular paycheck from your investments. Pretty cool, right? Now, when it comes to retirement portfolios, dividend stocks are very popular among investors. We all want to kick back and enjoy our golden years without constantly worrying about money. That's exactly what dividend growth stocks can do. They're like a reliable money machine that consistently churns out cash no matter what's going on in the stock market. Today, we've carefully selected the best dividend stocks for 2023. These are the companies that not only have a history of paying out generous dividends, but also have great potential for future growth and stability. So stay with us in the next 8 minutes or so, because we're about to reveal the top 7 dividend growth stocks that can really boost your retirement savings. And listen up, don't let anyone fool you into thinking it's too early or too late to start planning for your retirement. It is never too soon or too late. So right now, let's jump right into our first pick, Cisco Systems. Cisco may not be grabbing all the attention like those flashy tech giants, but it's still a solid moneymaker. Despite all the market sell-offs in 2022, Cisco's stock price has gone up in over 20% in the last year, and its dividends are at an attractive 3% level. Looking at the fundamentals, Cisco's latest earning release shows the company has managed to increase annual revenue to $54.9 billion, representing a 6% increase over prior years. Its free cash flow stands at $16.8 billion, an impressive increase of 24% compared to the prior year. One thing that makes Cisco really stand out is its awesome capital allocation program. Since starting their dividend program back in 2011, they've consistently rewarded shareholders with dividend growth for 11 straight years. Their initial quarterly payout of just 6 cents has skyrocketed by 7 times more, which is now sitting at 39 cents. This translates to an annual dividend of $1.56, which gives you a respectable dividend yield of 3.13%. Typically, for growth stocks, their dividend yield tends to be on the lower side. So even though Cisco may not offer a super high yield, it will make up for it with a nice boost in stock price in the long term. Plus, they've got a super strong balance sheet that can withstand just about anything. Cisco has demonstrated consistent efficiencies managing its capital over the years. The 27% operating margin and 28% ROE are just two numbers that speak for themselves. Its current price is also quite attractive based on P to FCF valuation. All of this makes Cisco a great option for investors who are looking for stability and income. So don't forget to keep Cisco in mind when you're planning your investments. Now, let's move on to our second pick, Verizon Communications Incorporated, with the ticker symbol VZ. What makes Verizon stand out is its impressive dividend yield at 6.97%, which not only happens to be the highest on this list, but also the highest among all stocks in the Dow Jones Industrial Average. Let's take a look at Verizon's financials. It has experienced a negative free cash flow during 2021, but since then, free cash flow has remained positive. Historically, they've been able to cover their dividends with free cash flow, and there's been a solid rebound in free cash flow following the pandemic. Looking ahead to fiscal year 2023, it seems reasonable to expect Verizon to generate somewhere between $13 billion to $15 billion in free cash flow, with their dividend costing around $10.8 billion. That puts them in a potential free cash flow payout ratio somewhere around 80%. So things are looking quite promising for Verizon. All in all, if you're on the hunt for a high dividend opportunity and are willing to keep an eye on those long-term trends, Verizon might just be worth considering for your investment portfolio. Now, let's move on to another exciting pick, Honeywell International, with the ticker symbol HON. Honeywell presents some enticing long-term investment opportunities. Over the last 5 years, Honeywell's price has gone up by more than 45%. Within the last 12 months, the stock is up almost 20%. With Honeywell's well-diversified industrial exposure and potential shift from a value stock to a dividend growth stock, it's definitely an attractive option for investors. Honeywell's fundamentals stand strong, with solid revenue and net income projected into the future. When it comes to dividends, Honeywell also has a solid track record. They offer a 2% dividend yield, which is backed by a conservative 45% payout ratio. Over the past 5 years, they've been able to increase their dividend by an average of 5.7% per year. And next up, we have Dao Incorporated. Over the past 5 years, the stock price has increased by 8%. The stock has a market cap of $37 billion and a PE ratio of 13 times earnings, making it more like a value stock. They offer a pretty high dividend yield of 5.3%, and their sustainability is backed by factors like earnings coverage and strong cash flow. Dow has made some great strides in managing their debt and reducing interest payments, which has boosted their earnings per share and reduced their dividend obligations. Looking at the company's fundamentals, they have stabilized revenue and operating income generated from core business, and their free cash flows are consistently in the positive territories. Analysts expect the company to experience a bit of a slowdown in the near term, but then bounce back with double-digit earnings growth in the upcoming years. So there could be some promising prospects on the horizon for Dow. And last but not least, we have Walgreens Boots Alliance with ticker symbol WBA. This one offers a safe and slowly rising dividend with a juicy yield of 6.5%. The company has an impressive track record of paying a regular rising dividend for 47 years, although the rate of dividend growth has slowed down quite a bit. Their most recent earnings release shows that the company spent $2.1 billion on capital expenditure, which shows the company is making big investments to provide long-term value and contribute to the company's ability to generate revenue and profits over time. Looking ahead, things are looking up for Walgreens Boots Alliance. In 2024, they're expected to perform better with synergies from their acquisition starting to show results and overall growth expected. So there you have it. These 5 stocks, including Cisco, Verizon, Honeywell International, Dow Incorporated, and Walgreens Boots Alliance, offer some enticing dividend opportunities across various industries. However, it is crucial to conduct thorough research and analysis before making any investment decisions. So thank you so much for joining us today as we explored the world of dividend stocks. Always remember to do your own research and stay as informed as possible. Like, subscribe, and leave a comment down below if you found this video helpful. Happy investing and more to follow. We'll see you in the next one.